Hello, good morning. Today is Sunday. I got a lot of questions related to how to take your profits. Okay? A lot of people get scared of the future. It means you take a trade. It means you do swing trading. So what does it mean, swing trading? Is to buy today, let's say you buy today, a stock $20, okay? And you think that this $20 in the future could grow up, okay? It goes to 22, 25, 30, 40, 60, you don't know. No one knows, okay? No one knows where the stock will be in 1 month or 2 or 1 year. No one knows. Now, for us as swing traders, we aren't going to stay years. We are seeing days, weeks, at the most 1 month or 2. Why? Why we just very quick and we don't stay too long? Because of the nature of the market. The market trends for some time and then it goes down. So for us, our goal is to stay when the trend is strong. Okay? The trend is strong, so we are making money. Now, what are the ways to take profit when the stock is going up? Okay. I propose to you, this is what I do in my account. Okay? Since I am a swing trader. Now, either you do like me or you have your own way, do whatever. For me, when I give you something, I give you why, and I give you the reason. Now, when I give you the reason, you go to your account and check it. Check the trades that you have done before and check it if you have made my own way. Is it better or yours is better? Okay, if it is your way is better and you can making more money and you are happy with that, that's okay, which is very good. Okay, you have another reason for taking your profit. Okay, if you in the previous trades you have done something, you see your account is shrinking, it's going down. Your account, I mean, your broker account, you put 5,000, you put 10,000 or 20,000, whatever your money you have, and you trade. Some trades are good, but you feel that you don't see that much money, okay? Either by percentage or by money. Is this because you do mistakes in taking your money before the trend has stopped giving money? What does it mean this? It means that you are right. For example, you buy the stock today, $20. Tomorrow, you open your account at 3 o'clock. It means, I told you always, don't try to follow your stock each minute or each hour because it's useless. We are not doing day trading. Why you are looking your stocks? You can, the only thing, exception, I will tell you later at the end of the video, how to look or when to look at your account, okay? Now, at the end of the day, next day, you see that the stock is 21, okay? You have bought 100 shares. Now, how much you get? You see to your account, you find $100 profit. It's green, it's a plus, and you are happy with that. But the problem is that you say to yourself, okay, I have this $100 in my hand. Okay? What if I take half of the profit, $50? I just sell 50 and I leave 30 for the future. Am I doing good? I'm telling you, you are doing wrong. Why is that? Because $100 is not enough. Why? Because the stock is still going up. The market is very generous. The market market is very generous for the people who are right, and he punishes people who are wrong, and punish other people who don't know how to follow a trend. They punish. Okay? So the market is the only direct teacher to you, to your account. You will see, how do you see your teacher? Okay? It's like reward. Excuse me. It's like reward and punishment. The market rewards people who understand the market. Okay? You say the market, he tells you next day, I'm going up, I'm going to give you money. And you tell him, no, I don't need that much money. I just need half of that money. I say, okay, the market, okay, you don't half, take it. And you take this $50 like this, okay? You take this 50. You are so happy to take this 50. Okay, take this $50. People don't understand. If you are scared to stay in the trade, why you do trading? Why you do swing trading? Why at the first time you come and you do a business like trading? Go and do a job. Okay? You work 40 hours. They give you whatever hourly rate or salary. You know how much you make, and you are okay. You are good with that. Why you go to do a business in the stock market? If you are scared, go to your mom. Stay with her. Okay? Here it is business. Business. You should think wisely. Have strong heart because you're doing business. You are taking from the money where the market is giving you money. So this is the first idea. Never take half of your shares the second day. Now, if you want, after many days, and you decide it's okay, so you put $2,000, okay? You see 25%, for example, you see $500, and you want to take some. That is okay, but for me also, I'm telling you this, I don't. Because this 25% that you get, it can be 50%, it can be 100%. So why you rush always to take the profit? Because at the end of the year, if you continue like this, you can never make it. Okay? You can never make it as a trader. You can never make the money. Or when you make the money, you should be having just 5% or 10%. You don't see the money at all. Because it's on the market, it's you who have been doing mistakes and you don't want to correct them. Because most of the time, the beginners are scared of the market. Don't be scared of the market. The market, if you are right, he give you money and he's generous. But if you begin to take your money, put stop loss. Exit. There is no feelings. There is no, it's a good company, it's a CEO, that it is a nice woman, and you like her, so you buy the shares of her company. No. There is no love, there is no commitment, there is nothing. You just date. Few days, take a pleasure of taking money, and then when things go wrong, exit. That is swing trading. Okay? So, the first thing I told you, don't take your money the second day. Your profit, don't take half and leave the half and you begin messing up with this. Now, if you don't believe me, for example, you say, there is one guru I see in YouTube, or there is a guru in TV, or there is one famous, very big trader, he tells us this. Okay, if you are following this guy, why you come here? Because the people, they don't understand. Some people, when they say to you something, they don't explain in full detail when to use this technique. It's not each technique you can use each time. There are exceptions to the rules. I will give you exceptions, I will give you the rule, and I will give you exceptions to the rules. Okay? This is how I teach my strategy. Okay. Just a minute. I'm drinking my coffee first. Okay. Now, You buy 20, tomorrow is 21. Okay, what you should do, what is my suggestion, my opinion? Leave it grow. 22, 25, 26, 27. Okay? Don't rush. Don't rush. Follow it by a stop loss. Whenever it goes down a little bit, you exit. So, you are making money. Always. Now, second thing is, don't leave the stock for many weeks without a stop loss. It means when you begin to, it's just a few days. Always the first day you should put stop loss. Okay, like those guys who I sent the stock picks. I send the stock picks at 3 o'clock. I ask them to buy before the market closes and put stop loss. That's it. Okay. Now, second day you check at the end of the day. If the stock market goes up, or your stock goes up, change the stop loss, the amount that has risen from the price. Okay? Just to change the stop loss. That's it. In order to protect yourself if the stock goes down. And then follow until you get much profit. For me, the second thing I'm telling you to do, in my opinion, is never take a decision to take your money when the stock is going up. This is a false idea, and this is against the rule that I have told you before, the Wall Street rules. What does it say? What does it say? It says, let the profits run. Don't cut your profits. The market is generous. And you tell me, for example, oh, the market will go down. Okay, let it go down. What's the problem? Oh, he will take my money. It's not your money yet. Okay? If you enter a trade and you take $50 or $100, an example. Now, you take another trade and you lose $100 or $200. So how can you make the money by the end of the year? This is math. That's why I have the other video. If you can check it. Trading is math. It's not magic. It's something that you calculate. Okay? Although you don't know what will happen in the future, but when you see the price, you calculate what you gain, what your loss. You calculate everything. So trading is a business. It's not gambling. I'm not just buying a stock with $1 and next week it will become $1,000 and you will become a millionaire, like the other guy says online. Okay? They try to sell you a dream and you follow them and you go with $5,000 and you begin going to these penny stocks. You lose 10%, you lose 20%, 50%, 2 trades, 3 trades, and then you have no money. And then you begin crying and you say there is manipulation in the market. Okay, you do such things. You do mistakes. But there are some people who are stubborn. I have seen people, they contact me by private email or by comment. They are so stubborn. That's why they will never make the money. They can't understand. They have the idea in the mind and it is false. They don't correct it. And this is the biggest mistake that you can do. Open your mind. Open your mind to ideas and do what is right always. Okay. What is the second thing I will tell you is try to follow your profits by stop loss. I will give you an example. Excuse me. We stay in the same example. Let's say the stock was 20, you buy it today, you put stop loss at 19. It's just an example, okay? Because it's difficult to do the stop loss. After 1 week, few days, the stock goes to 25. Now, the stop loss should follow your profit. So the stop loss is in 24. So if the market goes down against you, you exit with $400. Okay? Is this better than to buy at 20, you sell at 21 and half, you take $50, and then 50 shares, even if it goes to 25, so you end up having $300. Now, what I propose is $400. So 25% of your money, because you take this feeling of being scared of the market. The market, I'm telling you, sometimes it is so generous. You don't believe when the stock is 20, it goes to 30 in a few days. You don't believe, but it happens. So when the market is giving you money, stay. Put stop loss. If it goes bad against you, you exit with a profit. Always you have a profit when you follow my directions. Always. Okay? So this is the second thing I gave, which is wait until you have money. That is I have explained these two rules of Wall Street. It says, let your profits run. Don't be quick. We are not doing day trading in a few minutes or 1 hour or 2 you take your profit, because this is the way you do business. But you should buy a lot of shares. You don't buy 100, you buy 500 or 1,000 shares in order to make the money. Because time in swing trading, you have days to wait in order to make the money. You are not making the money in 1 day or 2. Okay, you should leave space. Now, number 3, there is in my opinion, for me, what I do, there is an exception for the second day when you want to take your profit. If you buy today a stock with $20, tomorrow before the market opens, or today when you buy after the market close, there is the earnings, or there is a new good news, and people who are big guys, they have the news before you, so they buy after 4 or before the beginning of the day. They buy a lot of shares, so you see a gap up. Now, if it is a gap up, what I ask you to do, sell all your shares. Okay? Or if you want to, you can sell half. But for me, I sell all my shares. Now, why? I told you before at the beginning of the video, you should never sell the second day, and now I tell you to sell. Because this is an exception. Exception to the rule. That's why for me, when I teach some students, I give them the rules, and then they give them exceptions to the rules. Because there is no something that it is static in trading. Trading should be flexible. There are situations where you do something that you don't do when you are in normal situations. Okay? This is typical in life. You adapt. Okay? You adapt because there is a new situation. And life always changes. So you should adapt yourself to fit in the new situation. If you have the old situation with a new situation, you will have a problem, and you make to yourself a problem. Now, why you sell? I'll give you the reason. You know, all my reasons are has nothing to do with the company. As I always tell you, I don't see the company, I don't see who is in the company or earning, I don't see anything from the company. Now, you buy today with $20, after the market closed, tomorrow you open, you find $27, the price, you see it at 8 o'clock. Okay, you just open your account at 8 o'clock, you see, oh, $27, you get $700, you have never seen this. Okay? Now, in the morning, you sell before the market opens. Now, why you sell? You sell because most of the time, not all of the time, most of the time, short sellers come to fill the gap. It means they push the price down because it's too much, it goes too much. They do it always. If there are a lot of people coming, or mutual fund buying, or a lot of people buying, you see that it is strong and it goes up again. the second day, the third day, the fourth day, you see the stock goes up from the first day high. Let's say, for example, the stock the next day. So when you buy today, it was $20. Tomorrow is $27. 27. It opens with 27. Now, let's say it goes to 28, and then it goes back to 27 or 26 and stops. Now you have done the good thing and you exit. You don't worry about short sales anymore. And you watch the stock that day. Then you check it the second day at the end of the day. Second day. If the stock is going more than the high of the first day, which is $28, if it goes to 29, buy it again. There's no problem with that. Because there are more buyers to the stock and it's going up. This technique I have used for many times. And if you check my video when I take my money on Facebook, I bought it at 25, and we have a gap up to 35. So I get $1,000 for each 100 shares. At that time, I bought 750 shares. So that's why I got $7,500. Okay? That's why I get that much money. But after a few days, the stock has gone down. Okay? So for me, I want to take this $7,500, I put it in my pocket, and then I wait. I wait the stock. If it's going up, I will buy again. I can buy 100 shares, 200, 300. Okay? Because of the momentum, it's going up. So more people are buying, so I will make more money. So this is how I proceed in doing the profits. Now, some people, they try to change swing trading to investing, and this is a big mistake. It's a big mistake. Swing trading, you should not stay 1 year and more like investing. You shouldn't. And you have some good profit. Let's say the stock goes from 20, it goes to 20, it goes to 35 in 1 month, and you stay. And you say to yourself, this stock I gain 75%. Why I shouldn't stay until I get 100, 200, 300? Yes, you can. But the problem is that in the market, we have corrections. Sometimes the corrections are so big. The stock goes from 20 to 35. It can go back to 27 or 25. It can go down. And you don't know if it can go down and stop. This is a problem. So we don't know the correction, how deep is the correction. Now, if you want to have more risk, you can stay as what you like. No one will stop you from staying. But if you get 75 of your money, okay, 75 of your money, and you leave this 75% of your money, the profit, it goes down to 10% to 20%. I don't think that you can make it as a trader, as a professional trader. Because the people, when they see too much money they get from a trade, okay, they should take their profit in one time with a stop loss, because the stop loss always follows the price. This is why I'm telling always stop loss is there. Stop loss protects you when you begin the trade, and then when it is up, it protects your profits. If the short sellers are going down, taking the stock down, you most of the time, if your stop loss gets hit, you are out and you just watch what happened later. You are out. You are not with those people who lose what they have. Okay? So this is the 3 things or 4 things that I have spoken about. If you want to take notes, you can make the video again and again and again and write notes. If you have some difficulty or a problem in making these things, you can just write or comment, send me a private email, or thumb it up, or subscribe if you don't. Now, if you are going to trade penny stocks, and you tell me one day, second day, third day, I'm not speaking about penny stocks, because penny stocks I don't trade them. I trade some kind of penny stocks that are not volatile. It's not the same. So you are going to do a risky trades, and that's why most of the people who do penny stocks, they can't succeed, except when they are professional and they know what they are doing. Okay? So thank you very much for watching this video. Hope you have a clear idea how I proceed in my how I take my profits from the market, and how this is done. I explained to you all like 3 or 4 things that you can do to take your profits, and this is very, very important. If you understand this, what I am telling you, you can make too much money, and you change from the way you do business before to what I exposed to you here as my opinion, and you can make too much money. Thank you very much and have a nice day.